Come here, buddy. Yes. Love you. Hello, friends. Welcome to this week's episode of James and Loki's Gems of the Week. People have been missing Loki quite a bit recently, so thought I would bring him back into the frame and say hi to the viewers at home. Let's get him more comfortable. There you go, buddy. And we can talk about the tweets on the Tesla Twitter world that I have liked over the past week and why I liked them. And if Loki wants to add any of his opinions, he can as well. Or if he wants to go lay in his dog bed where it's more comfortable, he can do that. Alright, so without further ado, I will share my desktop, bring up Twitter. By now you know the routine. This is probably not your first James's Gems of the Week to watch. As I get something stuck in my throat, let me get a little drink of coffee here. Oh man, that third cup of coffee is just hitting the spot. That's what you need. All right. So this was the last tweet that I covered in last week's episode of James's Gems of the Week. So we will scroll on up to the next one. So here's a tweet from the Short Shorts historian at Tesla Historian that I liked. From August 28th, I love this bull versus bears conversation from 2 years ago. So here's Gary Black. What I love about Tesla Q shorts as opposed to other shorts, they do no real research. They collect data, do not try to forecast anything more than a year out, do not talk to customers or the trade, don't even test drive what they are shorting, and they lose lots of money. So there was a reply here from Paul Dezan, which I will not read aloud. If you are blocked by most Tesla Q accounts, you have Paul to thank. He is the curator of the Tesla Q Blocked Together block list with more than 10,000 accounts listed. And here's a reply from Fly Fordat. On fact, he has truth in one point. It's not possible to forecast more than a year out, as Tesla will have gone down by then. So that was from August 28th of 2020. And these two were sure that Tesla would be a thing of the past by August 28th, 2021. They were certain of it. So I like that tweet. That was a good job by the Tesla historian. Brian Feroldi put out a tweet, at Brian Feroldi on Twitter. If you pick stocks, you must learn how to read an income statement. Here's everything you need to know. And Brian walked through the whole income statement. So I'm not going to do that because this thread does it. But if you want to follow this thread, check it out. And it explains stuff in a very approachable way, which is always what I try to do for folks who are not finance professionals, because we shouldn't all have to be finance professionals, right? That's not the world you and I want to live in, one where everyone knows accounting. That's no kind of world for people who enjoy life. So that was a good thread from Brian Feroldi, and I'll be going through my income statement forecast in part 13 or perhaps part 14 of my Tesla Q3 2022 earnings review video series that I'll be recording later on this morning. I did the first 12 parts a week ago, and I don't know how many more parts are left because it depends how long I'm going to talk. All right, next a tweet from James Catt that I liked, at TeslaFanMTL. Elon doesn't get enough credit for his strength in marketing. Marketing isn't only about promotion and advertising. That is just one part of marketing. Branding, product, understanding the customer and the market, pricing, distribution. All of these things are very important. Yes, marketing is a very large field of business analysis and strategy. The swoop of the X is meant to represent a rocket's arc to orbit. If you didn't know what that was about. So I like that tweet. That was good. Give Elon some credit for being a good marketer. Next, a tweet here from Doug Fowler. Thank you, and huge thanks also for all the analysis you so kindly share. Your work is high quality, comprehensive, and clearly described for lay readers. It's a gift to all those who take the time to carefully read, listen, watch. So I was the only person who liked that tweet because it was a reply to a reply asking me what kind of camera I use from my Stevenson indicator video series. And I use a Sony ZV-1 for those who want to know. Now I do. If you go back and look at those old Stevenson indicator, those first 3 videos out of the 4, I was using a webcam, like a USB webcam, and the difference is very noticeable between the Sony ZV-1 versus what you get with a little webcam. All right. Next, a tweet from Farzad Mizbahi at Farziness on Twitter. Supercharging in a Model Y is stupid fast. Traveling with dogs, by the time I walk dogs, give them water, use the potty, grab a drink, I have enough charge for a 3-hour leg. Best road trip car ever. Yeah, there's this tendency of people to believe that when they take road trips, they stop for nothing but gasoline, right? So people have bad memories. Their recollection is faulty when you ask them, how long do you stop on road trips? And what they'll say is, well, I only stop to put gasoline in and I keep going. But that can't be true because people are drinking, beverages while they're driving on long car trips, and there is a consequence of putting a lot of fluid into your body. It fills your bladder, and then something needs to happen next, right? Also, people have to eat sometimes, so if you go on a 12-hour road trip, there are people who will pack sandwiches and eat them in the car instead of stopping to grab hot food someplace on the road. I think people tend to give themselves too much credit for how fast they are at making stops because everyone has had the experience of making a very fast stop before and continuing on their trip, but people don't do that. You do want to get out of the car. You do want to walk around, stretch your legs, get feeling back in them again. You have to walk your dogs if you have dogs with you, right? So you're stopping routinely. Why not just stop at a supercharger, plug your car in, then do all that stuff? It's going to take you half an hour, 45 minutes, or whatever it takes. You hop back in the car and you're ready to go for another 2 or 3 hours. All right, another tweet here from Tim Busby in response to part 2 of my Tesla forecast review series, where I made a little rhyme. New to you, understood by few, a mystery to Tesla Q. Please take your cue without ado to view my 2022 forecast review part 2. And Tim replied, you mean part 2. So I replied, I do, it's true. All right, so the next tweet that I liked came from Alexandra Mertz at Tesla Boomer Mama, who recently changed her handle. This used to be at MME Alexandra S, and she changed it to Tesla Boomer Mama, which is easier to spell and remember. So good going on that one, Alexandra. And here is a tweet. Dear Joe Squawk, 20 years ago you had me on to discuss German rights ratings and my Moody's analysis then. Now I have much better. How the rating agencies screw Tesla. See below. DM me and let's talk. This needs to get out and I won't be shy about it. So that would make for good television if Joe Squawk had Alexandra on TV, on CNBC, I guess, talking about how Moody's is intentionally snubbing Tesla. Like, there's not another way to say this. They are disregarding the financial strength metrics for Tesla because, I bet it won't even get any bigger if I click on it. So, let me try it. Yeah, it gets smaller if I click on it because I've zoomed in so far. I responded to your feedback that my screen wasn't big enough. So I'm at a 200% zoom on only a 1080p resolution on my screen that can handle 4K. So this is as big as I can get it for you folks. If you're on a phone, I'm sorry. But looking at Tesla here, the market cap for Tesla is how these are sorted, top to bottom. So this is the most valuable company in the world, Apple, followed by Microsoft, followed by Alphabet, followed by Amazon, and then Tesla. Tesla's next, the fifth most valuable. I guess this is publicly traded U.S. listed companies is what's here, because there is Saudi Aramco, which would have a higher market cap than Tesla. For now, we'll see what happens to that down the line. But cash flow from operations, here's a very respectable $14 billion from Tesla. This number is going to grow over time. Don't expect it to remain mired at $14 billion only. So let's look at cash to debt. Well, 2.84 cash to debt, that's real good. Alphabet is better, Google, so they make a ton of money running websites and advertising. That's a very inexpensive business to be in. After paying for, some of the world's best software engineers, that's not cheap. But the business scales really well because there's hardly any cost. You have the cost of electricity, you have the cost of, running a big IT organization, obviously, but you're not manufacturing raw materials into products that you have to ship to people's houses or anything, or maintain a distribution network of, retail sales or something. All right, next is debt to equity. Tesla has the fifth best debt to equity number here. Again, Google is a little better. It's the only one of the companies with a higher market cap that's better in terms of debt to equity. Facebook is real good. Also, debt to EBITDA, Tesla is the fourth best at 0.47. Debt to revenue, Tesla has the best number here for debt to revenue. 0.1 is awful good. And the Altman Z-score for Tesla is the best. Altman Z-score is a measure of overall financial risk. Is this company at risk of going bankrupt? Tesla has the best score on that question, looking at Altman Z-score. And then if you scroll down to the bottom of the page, look what these automakers are getting. If they have a green shading over here, I guess I didn't get to these last two columns. These are the ratings from Moody's and S&P. Green means investment grade. Yellow means, or orange means below investment grade. So we have Ford, Renault, and Tesla as the only three on this page that are below investment grade. Third last is where Tesla ranks on Moody's and S&P ratings. But if you look at these metrics, almost without exception, they're garbage. So Stellantis has some pretty good numbers here on a few, and Honda has one that's pretty good. Debt to equity for Honda is pretty good. And there are no other good scores in this box, right? The rest of the automakers are in a lot of trouble financially if you look at them. Now for the Altman Z-score, I should add the caveat that for the portion of these companies that act like banks, Altman Z-score isn't great as a measure. So a couple of these companies here, JP Morgan Chase, Bank of America, Alexandra has inserted an NA, not applicable, because those companies, Berkshire Hathaway also, lots of banking and insurance for Berkshire Hathaway. Those kinds of businesses don't lend themselves to being judged by Altman Z-score very well because a lot of their debt is just, directly issued to people who are supposed to be paying them back in the capacity as though they are a bank, right? So even if you disregard the Altman Z-score column for the automakers, look at these other metrics, right? They're not looking very good. Unless what you want to judge them by is how much debt do they have. They have a lot of debt. That's not shown here, but billions and billions and billions of dollars worth of debt are here. And it's part of the reason why their market caps are not higher. If they had the ability to pay down their debt to very low levels like Tesla has over the past couple of years, they would have higher market caps. But that's not the case, and I like that tweet from Alexandra. Thought it was pretty great. And I have gone too far out now, so I have to go back to my likes and scroll on down to find this tweet before I proceed back up the page again. So here it is, and the next tweet that I liked came from CM at CMOLL279 on Twitter. Got my Model Y today, produced at Giga Berlin. May I introduce you to my Starship? Ich bin ein Berliner. So then tagging Tesla and Elon Musk on this with a yippee with that German plate on the front, as I mentioned in my previous video. So I like that tweet, thought that was pretty great. People are getting good-looking cars out of Giga Berlin. I like to tweet here from Cesar Pagado. Why you should never say never. I would have never thought I would be enjoying watching a nerdy financial guy who needs a haircut talking about himself and numbers. I love you, bro, and love your content. So this was in response to part 3 of my forecast video review series. So I like that tweet from Cesar. Next, a tweet from K10 at Kristen Netton on Twitter, who you should be following if you're not. Did you know Elon Musk has an honorary doctorate in engineering from Yale? I did not know that, so thought that was pretty cool. I know a lot of things about Elon Musk, more than the average person does, and that one surprised me, so I like that tweet. That's a good tweet. Next, a tweet from Matt Smith. Good news for macro, good news for Tesla Berlin. And he's retweeting Holger Schapitz with a Twitter handle here, Schuldenzuner, maybe. Power price bubble continues to deflate. German one-year power price drops another 7%, now down 49% from the all-time high. So this is a good sign that the price of German power, which had peaked like crazy toward the end of late August on a ridiculous spike, has come right back down to where it was in mid-August. So that was good news for Giga Berlin, where they make Teslas. Next, a tweet from Holmar's Catalog at Holmar's Blog on Twitter. Every single one of these pedestrians is being tracked in real time, the computer watching their every move, so that it will notice instantly if they start moving closer. Can you watch all these people at the same time? No, you can only look in one direction. That's right, look at all these folks that Tesla Vision is monitoring, keeping track of, and keeping you safe and them safe all at the same time. So I like that tweet from Holmars. The next tweet that I liked came from I Stand with Ukraine at the Jewbird7777 on Twitter. Someone who works at Tesla just posted a picture of record production for her shift. 441 cars in one shift is amazing for Fremont. I wonder what James Stevenson estimates are for Fremont production in Q3, hashtag Tesla. So I guess this is a screenshot of a record production number being output at Fremont. So yeah, for a single shift. So that's not a daily production number. That's a one shift number. So that's pretty good. And did I reply to this? Oh, they replied saying that I had already put out my forecast, which I have. So yeah, this is part of that. I am expecting Fremont to be at record highs for production. So hopefully that continues. Next, a tweet from Earl of Front Puppy tagging me. What was Earl tagging me about? Well, there's this thread here from Tesla Herbert trying to get Azair to 300 followers and suggesting that being a super follower of Earl would be a good way to do that. Avocado's number of Tesla fanboys at random NPC with a 0 in here for the O replied, "If you want to get to 301 followers, maybe consider watching this fun interview in its entirety between Tesla Herbert and Kim Paquette." And he said, "Will do." Then, still working my way through Herbert's videos. Azair said, "Me too. I love these in-depth interviews, and Tesla Herbert is doing such a wonderful job. We have so many talented YouTubers such as Hey Dave7, Farziness, Dylan Loomis 22, Tesla Daily, Rob Maurer, at Tesla Best, at 4K Podcast, that's Brian, at Alexander Sam Alexander R. Sam, and Earl added me on there, so that was nice. So a couple of nice things there, and I like that tweet. And the one from Brian where he replied and said, Tesla Herbert has fantastic guests and does really solid interviews. We're spoiled in Tesladom with an abundance of really sharp people, and I agree with that assessment, Brian. Next to tweet, another from James Catt, a blast from the past, King Moron. Tesla Twitter is a better place now. So Tesla Charts, on April the 8th of 2020, tweeted, "Cut down a forest for nothing but a few headline pumps. There will never be a Tesla factory in Germany." Retweeting somebody talking about the Ministry of Environment in Brandenburg and the application for approval of construction foundations. So I like that tweet. Next, a tweet from Chris Scottsdale, at Chris Scottsdale on Twitter. "Oh, so there is a block list, and they block anyone who's vocally pro-Musk or Tesla? This would explain why I'm blocked by so many anti-Tesla accounts, which I've never interacted with. These Q guys don't seem to like criticism." And I found that to be an extremely salient and true point. So I was the only person who liked that tweet, but I liked it. And here's another tweet from Alexandra. As I take another sip of my coffee, because I'm going to need it for this one. "Kudos to Moody's for answering my email. As to the content, help me please with ideas how to answer to Renee." So Alexandra sent a nice, very specific email to Moody's pointing out that they are very late to upgrade Tesla to investment grade, and that they don't look very smart having Tesla below investment grade when they are, by any financial metric, a much stronger than average company, right? Way more financially secure than most of the companies that Moody's and S&P are rating as investment grade. So what's this email say? "Dear Mrs. Mertz, thank you for reaching out to us. For reference, I copied below our considerations for an upgrade of Tesla. See press release January 24th. The considerations are not so much of a quantitative nature, but more qualitative. Importantly, we are looking for a broadening of the company's product lineup. Today, Tesla remains narrowly reliant on primarily two models, albeit highly successful ones. Note also in this respect that one of the models was first introduced in 2017. I don't know what that means. Does that mean that is that too recent? Is that not? Is it too old? What's wrong with 2017 to introduce the Tesla Model 3? It is the world's best-selling sport luxury sedan. Who cares what year it was introduced? It's the top-selling model in its category. More concrete prospects for a broader vehicle lineup would be regarded as a positive development in this respect." So I think that sentence means we don't believe Tesla when they say they're going to release a Cybertruck and a semi. I think that's what that means. More concrete prospects for a broader vehicle lineup would be regarded as a positive development in this respect. Like, how many products does Facebook sell? They're investment grade. They sell Facebook. They sell Instagram. Do they need more concrete prospects for a broader lineup of offerings before they can be regarded positively as investment grade? All right, what's the italicized paragraph say? It says the ratings could be upgraded if Tesla successfully expands its global footprint. Let's see. Tesla now has factories in North America and China and Central Europe, Germany. Maintains a strong competitive global presence. Tesla sells the number one selling electric midsize SUV in the world. And as I mentioned, the number one selling luxury sports sedan in the world. Better seller than the BMW 3 Series, better seller than the Mercedes-Benz C-Class. Or the Lexus IS, or whatever else you want to put up against it. Throw EV out the window. It's the best-selling luxury vehicle in its class. Maintains a strong competitive global presence as other automakers offer an increasing number of battery electric models. So it is not the number of electric models the competitors offer that matters. It is whether those electric vehicles are compelling to buyers that matters. Anybody can offer electric vehicles. Here, we've made vehicles, they're electric. Okay, what smart consumers do when faced with options is compare them against each other and say which of these represents the best overall ownership value proposition for price paid. That is what most reasoning consumers who care about the money they're spending do when deciding which product to buy. And the market has determined that Tesla's electric vehicles are the most popular and in the most demand, with long wait times despite Tesla's ever-increasing production numbers, setting new records every year, and selling all those vehicles, I might add, at higher prices. So this is a perplexing observation from Moody's here. Happy to see that Alexandra whited out the actual email address here so Renee Lipsch doesn't get overwhelmed with feedback from well-intentioned but perhaps overzealous Tesla fans. And improves its product breadth. Tesla's ability to sustain an EBITDA margin, I don't know why the depreciation doesn't matter, of at least 7%. Oh, it does matter, is what that says. Yeah, so if you include the D, then the EBITDA is after depreciation, because this is earnings before interest, taxes, and amortization. Of at least 7%, measured excluding the contribution from emission credits. So even Moody's wants to throw out ZEV credits. Come on, guys. That is real folding money. You can take that money to the bank and deposit it. How do I know that? Because that is exactly what Tesla is doing with the money they are being paid by their competitors who did not produce enough electric vehicles to comply with applicable law. You can throw it out if you want to, I guess, and I think you're going to wind up with a much higher number than 7% when you do. But come on, folks. My read of this paragraph is that you are grasping at excuses for why you're not giving Tesla an investment grade rating. And a consistent, prudent financial policy are also important considerations for higher ratings. Now, if I have to read into that clause, what do they mean when they say that? I think it's that they don't like Tesla buying Bitcoin, or that might be what Gary would say about this clause here. Prudent financial policy. So I would say that Bitcoin is just another liquid short-term cash asset, right? So Tesla has $17 billion worth of cash and another, I don't know, $500 million of Bitcoin. So if they wanted to convert it into cash, they would just sell the Bitcoin, convert it into cash, which they did with 75% of their Bitcoin last quarter. So maybe that's not prudent enough financial policy for Moody's that Tesla has converted 75% of their Bitcoin back to cash again. Further, Tesla will need to maintain very good liquidity, including ample cash and considerable committed availability under its revolving credit facility. Oh, well, Tesla's liquidity is very good. And it does include ample cash. I don't know how much more cash they need Tesla to keep on their books every quarter than $16 or $17 billion, while paying down about $6 billion worth of long-term debt. Almost no recourse debt left on Tesla's balance sheet. Tesla has been forming a fortress balance sheet over the past couple of years. And yeah, Tesla has plenty of money available to them under a revolving credit facility. So a very perplexing email here, and Alexandra did get lots of helpful responses. The one getting the most likes underneath is Gary Black saying, I agree with the shorts on this one. A traditional Tesla pickup could have been launched already, with Cybertruck for those willing to wait. Rivian and F-150 Lightning got a big head start. All right, so there's Gary's take on a traditional pickup truck that Tesla should have already made. Oh, and also this is the same argument made by Tony Sakanaki at Bernstein and many shorts. It's hard to forecast 3 million plus Tesla units per year on two models, given the industry's top two selling models today average 1.1 million units. Well, hold on a minute. Tesla might sell 3 million units per year of just Model 3 and Model Y. Gary is throwing out the Model S and Model X because they are lower production numbers, but those are still very good performers in their price classes, in the over $100,000 starting price segments for big four-door sedans and SUVs. Those two models are very competitive globally, so they're doing fine for their portion of the market. And if Tesla were to sell 3 million combined of just Model 3 and Model Y, given the industry's top two selling models today average 1.1 million units, well, wouldn't that be a good sign to a credit rating agency that this is the leader, that no other company can match the amount of sales that this company is getting from only their two leading models? I mean, shouldn't that make you feel better about giving them a higher credit rating if nobody is as good as they are at converting two models into cash? I mean, there is no standalone virtue to having a large lineup. If you look at BMW and Mercedes-Benz, they offer over a dozen models that you can purchase. It's not making them more profitable that they offer over a dozen models apiece, right? Tesla is already more profitable than they are. So if you can figure out how to make more money off a smaller lineup, shouldn't you do that? It simplifies the complexity of your operation. Maybe low confidence when Cybertruck and the 30K Tesla will be launched. Well, I wouldn't hold your breath on a 30K Tesla. Maybe there will be one, but this seems like not enough money to charge for the world's best available products. So maybe Tesla will figure out how to offer something at this price point, but prices have moved beyond $30,000. And when you're offering a superior product to what's already available for $30,000, the market wants to pay you more than $30,000 for it, or else it's going to have a very long backlog, and then you're dissatisfying everybody who wants to buy the thing because they can't get it in a reasonable time frame. All right, and I think we're going to end with a bunch of tweets from Napenlois at ENN_Napenlois, which is Icelandic for anonymous, as you may have heard me say a few times. Okay, so 4 out of these last 5 are from that account. I'll go ahead and hit the other one first. At Troy Teslike tweeted, the Tesla China team is expected to deliver more than 100,000 cars this month. This will be a new record, the highest month last year, with 71,000 in December. The highest month so far this year was 78,000 in June. So that is a big record beat, and expect more of that to follow. Tesla will be setting a lot of production and delivery records soon. So these are replies to this thread that we were just looking at. Why should Tesla prioritize a greater number of vehicle lines when they have mile-long waiting lists for existing models? They have other models in the pipeline, but they've been deprioritized because too many customers are throwing cash at them to get their existing products. This is the point. Would the management of Moody's in Tesla's situation prioritize new models over maximizing growth? In a situation of massive excess demand, I would certainly hope not, especially with the new EV bill. Yet that's precisely what you're demanding of them for a creditworthiness upgrade. Yeah, so if you were trying to offer up excuses for why you're not upgrading somebody's credit that you think will last for a while, these would be the ones you would offer up. You would analyze Tesla's situation and be like, all right, they're making more Model Ys lately in their new factories in Texas and in Berlin because there's way more demand for Model Y than they could fulfill out of their old factories. And they're just trying to supply the world with as many Model Ys as the world wants to buy. So that makes sense. That's a good business strategy to do that first, especially if you're in a cell-constrained environment, which Tesla has been operating under for the past few years. Yeah, so these are great tweets here. Moody's is in effect setting up a situation in which the management must choose between responsible management, maximizing growth by producing more Model Ys, or irresponsible management, expanding to a larger lineup, which is what Moody's says they want, that will short-term benefit its shareholders by making suboptimal management decisions to please Moody's. Well, this is not how you manage a company. You don't manage your company to make Moody's happy and give you better credit ratings. What Elon has been doing and what Zach has been doing is paying down the debt to just make it obvious to any investor who cares to pay attention that Tesla is being rated wrong by the agencies and allowing retail investors the opportunity to get in ahead of all the funds that are constrained by bylaws that prevent them from investing in any company below investment grade. So once this ratings increase occurs, all those funds, think pension funds or whatever, will be allowed to invest in Tesla, and many of them will, and that's going to cause share price appreciation in the future, all things being equal. So, I mean, the way to view this as a positive is to say that Moody's is keeping the Tesla share price lower today for retail investors by boxing out the funds prevented from buying Tesla equity because it isn't investment grade yet. I await Moody's downgrade of Apple to junk status on the basis that half their revenue comes from the iPhone, a larger fraction than any Tesla model, something they introduced in 2007. What? They've upgraded it regularly since then? Oh, you don't say. Yeah, Tesla makes their products better continuously, all the time. They don't wait for model year upgrades to make the car better like other automakers do. What you're basically saying by all this, we won't upgrade Tesla beyond junk unless they act more like inefficient old-school automakers. Tell me, exactly how well are old-school automakers doing these days competing against Tesla? Why is that dated business model something to be praised? I'll like that tweet too. That's a good one. Okay, and then there was actually one more up here, which is well, I liked that one just now. The myth that renewables need weeks of battery storage. This one has been circling a lot recently, so I might as well nip it in the bud. It goes like this: to save the planet with renewables, you need weeks of battery storage to keep the lights on. Impossible. Well, this is a great thread where you can read all about how there's the Pareto principle here, but then it's a long thread, which I won't read all of to you. You can go check it out. I'll leave a link in the video description, or you can search for it on Twitter and find it real fast. You don't need that much battery storage. You just need more renewable power production. And the more of those sources you have, the more diversified you can become. You just need some battery storage, and you'll be fine. Or at least you'll be making a lot of progress versus where we are today, and maybe not need very much fossil fuel production to then offset. All right, with that, we have reached the end of James's Gems of the Week for this last week. So if you've enjoyed today's video, click the like button. If you're not subscribed to my channel already and you'd like to see more content like this, click the subscribe button. You can click the alert bell, and it'll give you notifications when I post fresh content, like this regular weekly series or the other series that I do, Who's Hating Hard on Tesla Today, my forecast review video series, or whatever else I might make a video about, and I will see you in the next one.